Hey everyone, how are you doing today? Let me get rid of this. All right. So today, wanted to walk through the updated context analysis dashboard. Hey Hakeem, um, there's a lot of things that have changed, a lot of UI improvements, new feature statistical displays, just more information about the principles that I use to build it. And I wanted to go through and answer any questions that, hey, Faisal, uh, answer any questions that you all might have about the product and about how it might be used. And then we'll walk through uh, one of the kind of preliminary case studies that I use when discussing it and how to use it and how to think about the reason for using it and the kind of trajectory that you might go on, uh, starting with essentials, using standard, and the kind of complex. I'm gonna use a word here. There's two different ways of thinking about CAD, and I'll kind of preface the discussion today with this. Um, the kind of it's a way of helping us become more creative in our thinking, and the the first way that we are really that people are creative is by combining things. So there's combinatorial creativity and there's transformational creativity. And transformational creativity comes from uh, combining, I'm going to use the same term, combining things which are not related to the thing that you're doing or not directly related. So it might be, um, having experience, working in, some other discipline. Like in Systems Academy, we have people who work in aviation, and their experience in aviation transfers to their work building systems because of the foundational principles that they've learned and internalized, which they apply creatively to the process of building systems. And it's actually very similar using the context analysis dashboard to focus your study habits and to reorient your thinking. So unless there are questions to start, I'll share my screen and we can get into it. All right, perfect. So let's do this. All right. So this is actually, let me start here because we want to begin with essentials. So this is the essentials dashboard. And inside of the Quant Systems environment and our Learn Worlds environment, if you are on the essentials page, you'll see that, and you're subscribed, you'll see this continue button, which will take you to the case studies, which are two different methods for using the dashboard, or to the dashboard itself, and that's here. So let me just make this. Okay, let me see how this looks. I want to change the layout. I'm going to get rid of myself completely because there's enough here to see that I will be a distraction. Okay, so I'm going to be on a different window. So I'm going to check back and look at any questions that pop up at a good stopping point after I've walked through some examples here. So there's two different versions of CAD right now. There will be a pro version that comes out, and I don't know. I can't commit to any timeline because it's significantly more sophisticated and demanding to build. But the two versions that exist currently are Essentials, and you can see it here, and the standard version. Let me clear this. It says standard. So we'll start with Essentials because I think that most people most traders will likely start with essentials, and there is a trajectory that you would go on in theory if you find benefit from using essentials. But the clearest example that you can begin with is we know that markets are always responding to some event, right? Events generate responses. And I suggest that most traders, when they begin using CAD, start with the first event of the day. The thing that begins the day is the gap. Whether there is a gap or there isn't a gap, the size of the gap, the direction of the gap, right? All of these are first data points to begin calibrating our thinking. So when we start with a gap, like let's say, today, or what was today's gap? Let's just double check. So today was a little bit over 50% of the average daily range. So we'll just say bull gaps over 50% of the average daily range for the last 20 days. And so what the opening gap feature here does is it allows you to put in positive and negative values, so you can study both bull and bear gaps. They're not it's not flattening, and so if you put a gap, a positive gap of greater than 50, this will be all bull gaps greater than 50% of the average daily range for the last 20 days. And you can see the tooltip tells you what that is. So if you wanted to do the same thing for a bear gap, it would be bear gaps of less than negative 50%. And you can also filter by ranges, so you could do everything within that range. So anything between, so both bull and bear gaps, um, and this would give you a much larger data set. But for today, we'll just stick with bull gaps of greater than 50%. And you can see that until you apply the feature, it remains pending over here. So once you apply it, you'll see that the filter was applied, and you have now a filtered data set that you're working with. So any probability distributions that you display are going to be based on the filtered data set and the filters, your active filters. So now here we can see that for bull gaps of greater than 50%, the probability of closing the gap is about 27%. Now, there are other moderating factors. So for most traders, they would start with this and say, okay, well, now I know that in general, for the 307 days out of the last 2100 days, and this is the other thing about the dashboard, is that it has about 9 years of data, so it's a very statistically significant sample size. And what this tells you then is that the confidence interval is about 5%. So within the occurrence rate is the absolute, but then the confidence interval changes based on the number of days within the total data set. So the amount of data that you're able to base this this occurrence on, and then it projects that into the future for subsequent distributions. So then you can say, okay, well, if we know that the opening bull gaps of greater than 50% have a probable close of 27%, then what are the other things that might happen? And then you can go through and look at breakouts of the Globex high, breakouts of the Globex low. So 86% probability of breaking out of the Globex high, 23% Globex low. So then you can further calibrate thinking. And the way that I suggest organizing the initial exploration of CAD is to start sequentially in time, so that you're not distracted and you don't get overwhelmed by all of the different sources of information and the probabilities that they show, but instead structure it temporally. So you start from the beginning of the day and use the features that correspond to the progression of time throughout the day. So where does the opening range close in relationship to the previous day's range? So the opening 12 bar range, does it close inside of the previous day's range? Then how does that change these probabilities? Well, the probability of breaking out of the Globex low goes up significantly. So that's just an example of how adding a feature can significantly impact the other outcomes that you're looking at in your probability analyses. So let me step back for a second. I want to see if people have questions, and then we can move on. The average daily range, the yes, so the Globex range is included in the RTH session. So the percentage of that the RTH session represents as a percentage of the full session range of the last 20 days. So sorry, so no, Easton is actually correct. This is I said that wrong. The exactly, and Easton has the same statistic in one of his uh, elegant indicators, which he uses. So yes, this is based on regular trading sessions. I was reading another comment and misspoke. So this is the common calculation that Ali uses in his opening gap indicator, in which you've probably seen on my other streams where we talk about categorizing day type and using the opening range. I'm sorry, the opening gap to define part of the thinking for the probability of different day types. So, uh, who created this? I did. This is something that I built over the last 2 years. So, any questions about the principles of the dashboard? I can walk through now some of the. Yes, that is good looking out. So we will go back here now and take a look at some of the other just general features instead of the process of implementing a specific type of study. So let me clear all of these. So as you can see, there's all of the available features, and I'll be adding features. I have a number of other modules that will be appearing in the coming months. So there will be a simple leg, spike module, pivot study. There's a bunch of things that are coming, but for traders, you can organize these, however you want, order of priority. Things that you're not actively studying, just dump to the bottom. Organize it however you need to. You can also close them, but closing any single feature category does not close the probability analysis. So you can close it and still return to it open. So you can kind of hide things, organize your research process, and then still have everything already laid out, depending on the thing that you're studying. So here you can see that when you apply probabilities, you have the ability to either clear probabilities, or after you've, say, filtered for days when the opening gap closes at all. So when the opening gap closes equal to or greater than bar one, then you'll see here all of your active filters. So then if we wanted to look at these days when the opening range is greater than, say, 60% of the average daily range, which would be a meaningful opening 12 bar range, you can see that you have now two filters applied here. Obviously the filtered data set was reduced, but then you can remove just one without having to totally recalibrate your study. So it gives you a lot of flexibility for the way to move through your data exploration. And this kind of gets back to that idea of combinatorial versus transformational creativity. The context analysis dashboard is really a shortcut. That's the reason I built it, was for myself to do context study. And obviously it's grown a lot. It was originally a very, very unwieldy Excel spreadsheet with lots of macros and active formulas and other sheets that it was doing VLOOKUPs from. It was just absolutely unmanageable. And obviously you can't use a 10-year data set in an Excel spreadsheet without, well, it just doesn't work. So this is the evolution of an Excel spreadsheet. But as a result, one of the things that I've found is that spending more time with it and seeing the relationship between the combining, combinatorial process, adding one filter and another filter and seeing the impact it has on probability distributions for other feature sets, gives you a very tuned sense. I don't know how to describe it other than sense, but feeling for the reality of probabilities. And this is something that I found is very difficult to come by otherwise. You can do it obviously through the kind of studies that we do in SA2 or in PTM, and which Eason has done many of on his own as well. These result in similar outcomes, and that's one of the great values of the human discretionary, systematic discretionary trader, is the ability to creatively synthesize the individual probabilities of different events and transform those into well, Ali calls it the trader's imagination. It becomes the trader's imagination, is basically this orchestra of probability distributions for single events that together make an elegant probability distribution for the entire day. It evolves, and for all of the market contexts. And so the process of using the context analysis dashboard is one of the ways of reinforcing, of accurately and consistently and structurally, systematically reinforcing this process that gets us to thinking creatively and probabilistically at the same time, which is can be a very long process. So let me just hit on one other thing before I return to the comments. There's also a tab here for the statistical methods that I use in CAD. You can walk through all of these. They're just pretty straightforward. It explains what all of the different methods are and why they are used for each of the features they are used on. So now let me just return to the dashboard and to any questions we may have. All right. Okay, great. Well, then what we'll do now is take a look at the standard version, which has a bit more functionality. And this is not to say that the Essentials version is not functional. One of the reasons why I think that it's useful for people to begin with something like the Essentials version is because it can become very overwhelming very quickly to deal with the kind of probabilities and statistics that you get from the standard version. It's very helpful to have some experience and some pre-calibrated expectations for the features that you're looking at, and kind of a baseline imagination or visual representation of what these look like on a chart. However, standard also has charts, which is one of the big differentiating factors. So let's just go through and do the same study here in standard. So days when let's start with greater than 50% of the average daily range. Okay, so we've now applied that. And when we look at the probabilities for the gap to close, we get a bit more granular information. So we see the distribution pattern. We get the IQR, which is the interquartile range, is basically the 50% of the entire distribution, the center 50. So it's the most common range when the feature should be expressed. It's 32 bars, right? So the middle 32 bars of this is that distribution, and then the median outcome is bar 24. So here you can see that the highest probability 9-bar period, and you can see the period analysis here is a new section, and the timing analysis. So you get in standard, there's a lot more emphasis on the timing component of the research. So in standard, we start with overall probabilities. I'm sorry, in essentials, we start with the overall probabilities. And in standard, we move on to timing and as a derivative of that, period analysis. So we can see here that it's organized according to the 9 45-minute bars that occur during the day. So if you're calibrating your expectations around the 5-minute bar, which is what a lot of us trade, then these are the 9-bar expression of the 45-minute bars within the regular trading hours of the E-mini. So we can see that of these 9 bars, the second 9-bar period, or the second 45-minute period, bars 10 to 18, has the highest probability for closing. It's not significantly higher than the periods before and after. But this is after this, you will have there will only be about 17% remaining probability that the opening gap will close. So this is the first major distinction, is that you get a lot more statistics, and they are focused on timing, at least for these single event features. So now let's take this and clear this feature, and then we can look at the probability distribution. So here we can see that if there is no opening gap included, then the highest probability is that the opening gap closes on the first bar of the session, right here, bar 1. There are 348 times out of the 2,100 that it closed on bar 1, so 37%. And we know that this is a significantly left-skewed distribution. So without any filters applied, this is what your gap close probabilities look like. If we look at the range of small gaps, so around, and actually there's a variety of ways, before we move on, there's a variety of ways to define gaps. Here we use a statistical method that divides it into these ranges, so these IQR ranges. So if we take this range, so the 0 to 13%, this is normalized. So for both bull and bear gaps, this would be the small gaps. So a gap up to 13%. So then if we take the range feature and we consider both bull and bear gaps, this is going to show us, 22.98%. And then, well, actually, because it's this is equal to or greater than, so it's going to be slightly more. So when we look at this now, we can see that the probability is 92% that they close. And the IQR range is 1 to 3. So basically, all of these bars, if they're going to close meaningfully within the first 5 bars. And almost all of them on the first bar. This changes significantly as we expand that range, and so if we just expand that range back to the, let's move this. If we consider up to 26%, we'll see that distribution change, but not significantly. And we know why, because it's still considering the smaller size of gaps. And that this obscures those larger gap days, which account for anything over 52%, is going to be 314. So, well, actually, let's just do this. So the bull gaps of that size are going to be 277 days, so 13% of all days. And here you see the distribution pattern is completely different. And this is one of those things that it's hard to visualize until you see it in a chart, or in this case, the bar chart. But what becomes even more helpful is that there is a chart component to this. So here, this is those 277 days. And now we can go to the charts and study every one of those 277 days and look at the nuance that we have here, the close of yesterday, Globex low, high of yesterday. This is the open, that day's open, and the Globex high. And so you can go in and study the price structures that develop on this day. And this is where you start to see a lot more of the study time that you can really spend with CAD in the standard version. It gives you the flexibility to get pretty granular with your filtering, and then understanding what the actual variations are on this type of these types of days. So these will be all bull gaps, and they will be um, organized for the last 10 years, going back all the way to 2016. So for me, the reason why this became so useful is because wanting to understand and really fine tune and calibrate my expectations for the variations that might occur across a day with X feature that occurs. A wide range, opening range, a large bull gap that closes, a close inside the previous day's range, and a small range that breaks out after bar 40, right? All of these things can be configured in the dashboard, and then with the standard version, you go and you can study the charts, and you can not just study, but you can export them. So you can download the chart, you can add notes, you can do so you can configure your own study methodology to internalize the probability distributions. And this is where you start to get that transformational creativity and the ability to project the variations that might occur based on the specific filter conditions, which are otherwise just probabilities on a screen. So let me pause again and come back to answer any questions. It's an interesting question. There is no option currently. Uh, I could do this. I could certainly. I mean, I have the data for that. There's no reason not to. The reason for using the percent is that the market responds to the the absolute number of ticks is not as important as the percent that it represents. But I don't have anything against adding it. Actually, that would be pretty trivial to add that. So yeah, I can go ahead and add that. Um, that's a good suggestion. And this is so as the first time this is being publicly available. I welcome all feedback and comments, and I can certainly integrate new components, new features, whatever your ideas are. I'm happy to consider them, and I've built it with modular first principles, so most things should be pretty straightforward to add, so long as they're not dependent on sophisticated models, like the you know like an LSTM or like a convolutional neural network. Like as long as it's a straightforward statistical calculation, I should be able to add just about anything. The pro version will have some of those models and some Bayesian models, which is one of the reasons why it's a bit more demanding to figure that one out. Semer said, yeah. So this is actually the reason. Ended up being the reason why I spent so much time with it myself, is because especially with folks who use TradingView, having that limited data set to configure these kind of context studies makes it much more difficult to get the variations that really help us internalize the underlying effects of the probabilities and the effects and then the outcomes of the probabilities that we need to understand as systematic discretionary traders. Eason, Yeah, oh, yeah, I'm gonna get to the signals in just a minute. Good call. Yeah, and actually and for anyone who's interested, this is a free charting library. It's called D3. It's used by I think it was used by Bloomberg at one point, but it's an open source, charting library. I mean, it takes a good bit of doing to get the chart to, behave, but yeah, you can do a lot with it. It's a really, really great package. So let's just take a look back here again. One of the things that you'll notice is that we also include the last 9 bars of the previous session. And this is because in order to understand uh, the impact of or not the impact, but the implications of the features that you're studying. So in this case, the only one we've applied is the opening gap greater than 52%. Well, the opening gap is greater than 52%, but how did the previous day end? Well, it ended with a high one that was triggered and failed. Okay. So then this is something to consider after this big opening gap. The market was always in long, high one, and then opening gap. So this is the reason why we include it. It's because this is a context study tool. And so having the context for how the most immediate event, and again, thinking in terms of time, when the session opens, the thing that you want to know first is how did the previous day close? Did it close did it close always in? Did it close in a tight trading range? What was the behavior of the market, and how does the current behavior represent the response? Because we need to understand what the current response is, what the current price action is a response to. Um, so let's just take a look here. We also have, as Eason mentioned, we have an indicator. So this is the AMA breakouts paint bar, which some of you I'm sure are familiar with, but you can, after you have some preliminary context study complete, one of the things that you can also do is add the signals here. And what this does, it has all of the signal configuration that you have inside of the regular breakout paint bar. You can do everything here. And then it tells you how many signals were triggered that day. And if you go over the bar, it tells you what they were. So IBS, bar range, average range, body range, and full range Z-score, and then the signal type. So you can see here, signal of 5, which is a big bar. So and this is according to the full range. So it's a Z-score of 1.92. This was 2016, so it was a big bar was 3 points. Oh, the days. And we can go through here. This is a very big bar, Z-score of 4, and it was a 6-point bar. So this is one of the ways that you can basically use the context analysis dashboard after you're very comfortable with it. You've calibrated a study, you've done all your chart analysis, you've printed a bunch of charts or downloaded a bunch of charts, organized all of that on your own, taken it offline and studied those. Then you can come back and start to extend your context study to a signal study. And this is where things can get even more interesting, because then you can look at the behavior of your signals in different contexts. And this is, again, something that's very difficult to calibrate, outside of this kind of tool. So let me come back and see if there's any questions here. So I am going to have CAD for other futures. I plan to add at least oil, NQ, and gold. One of the challenges is that it operates based on the features which are derived from the typical equities hours, the E-mini futures hours. So the ranges are not as relevant for things like gold and oil. But I mean, I have development versions of these with both of those markets, and let me just pop on screen here for a second. So I have development versions where I've tested both of those markets, and it's still obviously usable. One of the reasons it's usable is because you're basically just using the same measuring stick, right? As long as you enforce the same standards, you can derive meaningful statistics. But I believe there are probably some better methods to use for trading those markets than enforcing the equities kind of timing on it, the equities futures timing on it. So I think NQ, Russell, ES, like those are going to be natural fits. Gold is pretty closely linked in terms of time and volume, but oil has a lot of activity prior to U.S. hours, and so we capture that with all of the Globex statistics, and so it's implicitly contained in this. But at least those are the ones that I'm planning to add. So there'll be basically a. Let me just go back here real quick. There would be a. I'm not actually sure where. I was thinking somewhere around the top here, a drop down to select your market. So it would be, date, market, selector up here. So, yeah, exactly. It's different. So figuring that out is a challenge. You can, and it's still statistically meaningful. You can still use the same features to understand the behavior of it during the regular trading hours, because you're basically doing a study of those specific hours. But I think getting the complexity of the 24-hour cycle for those, I mean, commodities just trade differently. Getting the complexity into the dashboard is just, it would be different. Anyway, it's a challenge. I'll be adding a much easier add is actually equities. I could add any equity pretty very easily. So doing futures, equities, those are all pretty straightforward. So there will be other things coming. So something else down the road. All right. So let's just take a look at some of the other components here. The features that have a single event are, display their probability analysis like this. They have the probability, timing, and period analysis. And then we have for features that are ranges, so percentages. You can see here it's the same as the gap percent. So in this case, actually, after we filtered for gaps of greater than 52%, which is the upper end of the gap distribution, we can see that anything within that range, greater than 52%, the full distribution is this, and then the IQR of that is 60 to 84. So very left skewed, and then the outliers are, there's only a few of those. Now, these are organized similarly using the exact same statistical method. But one of the things you see here that we don't have in the Essentials version is a high of day and low of day bar study. So this is an interesting one. This says how many new low of days there are on average. 7. Well, we have a filter applied. So this is in the case that we have a large opening gap. There's an average of 7 new low of days with a median of 5, max of 31. That the highest probability is that the final low of day occurs in the opening in the first 27 bars of the day. The final low of day occurs in the middle of the session, 12% of the time, and at the end of the session, 26% of the time. There are new lows of day 17% of the time during the mid session, but they do not become the final low of day. So there's some interesting statistics you can get from this, and then once you filtered using these inputs or the low of day bar, so you can choose what bar the low of day represents. If it's greater than 27, we're going to have to remove the other feature, but actually no, this is still have 100 days. Okay, so here the low of day is greater than 27. Obviously, the final low of day cannot occur during the opening period, so you got an A there. But if that is the case, then the final low of day occurs 70% of the time in the last third of the session. So then you can go to the charts and study that. So again, these would be studies that would be just painful to calibrate otherwise, and probably not even worth the time. This is an interesting question. It's actually not very useful, because the process of using it is the valuable part, not the raw probabilities that it generates are not actually the most valuable part. It's the exploration process and spending the time doing that exploration that is valuable. And if the AI generates a shortcut through any of that to some specific probability, outcome, then it's actually shortchanging you, the human, from the process that is most valuable. There's actually an interesting report that was done on AI in business, and the role of AI in business is largely overstated. It can be used in background policy and procedure, but in products, it is largely inferior to simple machine learning. I say simple machine learning and domain specific statistics. Those become far more valuable, and especially if you can use them appropriately. And so what we see with CAD is actually the pedagogically sound use of statistics that are relevant to the thing that we need to know, which the AI does not know. We know it, and I've spent a good bit of time with machine learning and tried to teach AIs tried to teach machine learning algorithms to learn price action, and they don't do it. You need to enforce certain rules, and from there you can get meaningful statistics out of it. But the role of AI, I think, at least for the near future, is probably not terribly significant. And at least in a product like this, there might be something else that, or maybe I'm not seeing it. There could be something that I'm just not recognizing. But I'm probably not going to be adding a chatbot to it, or like a natural language component for interrogating it. I think that eventually there will be. Hold on, let me just make an appearance here. Eventually there will be a product for people who want to interact with it using APIs, because it's an API first product, internally. And so there will be a component that will be accessible via API in the future. And in theory, you could use that. You could use probably an MCP server to interact with that API and do queries in natural language for the different things that we're doing right now in the UI. That's kind of like the closest um, jump I could see to integrating AI would be some kind of local environment IDE or command line interface where you're using an MCP to interact with the API backend for CAD and doing those kind of feature configurations here. But yeah, I'm sure there's something I'm not seeing though. So would love to hear your thoughts. Uh, yeah, this is going to be. I'm streaming this now, and it will be on the YouTube channel. So go to sleep. No need to stay up now. Watch it. Watch it when you're fresh. Okay, so let's just take one more moment to look at some of the other kind of unique features that have some more specific calculations or different rather uh, outputs. Right. So here we have these are again the Globex high low. These are single event features. Opening range close. This is the relationship of the opening range to these other context levels. So the relationship of the opening range close to the open. This is to the Globex range and the previous day's range. So one of the things that you can do with standard that does not, it's not in Essentials, you can also turn on previous day filters. So you can say, if the previous day, in this case, it would be say, if the previous day had an opening gap, let's just clear everything. If the previous day had an opening gap of 52%, then you can look at this, right? So obviously this day did not have an opening gap of 52%, but the day before it did. So then you can look at the impact of any of the price action inputs that occurred on the previous day and their impact on the following day. So this is here. So if you can kind of envision this one, so the opening gap percent was 52% on the previous day. It sold off into the close. It was a pullback with a higher low double bottom, or almost actually nominally higher low, and then trend resumption. Right. So this trend resumption is the result of this opening gap the previous day and the failure to continue this always in bear regime. So one of the ways, the significantly more sophisticated ways that you can conduct your research with CAD or with the standard version, and the reason why I think that Essentials is good for most people because this gets pretty complicated pretty quickly and needs a lot more time and I don't say discipline, but you have to have a plan for your study in order to use all these tools properly. And that's why we have case studies on the main page. So you can see here there's a lot of information about how to use it. There's case studies, and you can read everything there. And we'll be adding a section here called the Education Hub, which has even more content on different ways of using it. So there's those. And then we have the regime analysis. So these have some different statistics. You can see the time in regime. This is daily closes above the EMA, daily closes below the EMA. So pretty different distributions. And this is for the unfiltered data set. And then you have intraday regime. So this is 5-minute EMA statistics. So, or 20 bar EMA on the 5-minute chart. So let's just display both of these real quick. So you can go through and study any variety of day types, or not day types, any variety of EMA conditions using these, and they're obviously very different type of statistics from what you see here. These are distribution analysis, period analyses, these are different, right? So you get the regime analysis, the time in regime, the number of days, and then here are the streaks, right? So the average number of bars above the EMA is 5 bars, with a maximum of 81. Then once the market has been above the EMA for more than 5 bars, 88% chance of continuing, and then you have the probability of continuing, for these other uh, distributions, right? Or these other thresholds, and these update programmatically. So you like if we apply the opening gap to here, go back to that 52%. You see all of these bar numbers changed. These are updated according to the distributions rather than a hard coded threshold. So you can see um, if there's a opening gap of greater than 52%, then the average streak changes from 8 to 10.5 bars. This changes as well. And the maximum number of bars below the EMA on those days is 51. So you can do a lot in terms of chart selection using this as well. And for those who are interested in the days when there are no closes below the EMA, those very, very few, just go to when there were 81 closes above, and you get those 12 days. You just go look at them. And so this is one of those really unique things that you can do with CAD. Is just go study all the days that have no closes. And actually, one of the things that I didn't realize until I was using this was that there are no days, at least according to the data that I got. I mean, I'm using institutional data. There were no days that had that were exclusively closes below the EMA. Those days when you have no closes on the other side of the EMA, they're all bull days. There were none. The most closes below the EMA were 74 bar streaks. So there's always a pullback. So if we look at this, we can go to, I mean, I don't know how many days this is going to be, but let's just go to equal to or less than, oh, sorry, no. Oh, that's because here. Okay. Oh, this is interesting. That is a bug. All right. That'll be a fun one to find. All right. Well, now I have a mission. I'm not sure what you mean the final output. Could you explain? If you're going to add a bit more context there. All right. But let's just go back here. So any days that have greater than say 65, we'll keep a safe value. So 3 we have. Interesting. 69. So you're going to have these days, but there's obviously an error in the way it's sorting. So I'll have to fix that. Let's go back here. So those statistics are different. They're using different calculations there. These are all the same. Ranges, we went over the ranges and the high of day and low of day bars. The opening range close is actually the same as the end of day. So you get the same above, inside, below. And between all of these different features, you can essentially configure, I don't know, technically millions of different types of studies. And so this was a intro to the new V1 of the product. And I'd invite anyone to ask questions, submit your questions on at the bottom of the video, email me. You can reach us through Quant Systems, or continue to ask any questions here before we wrap up. The purpose of CAD, you may have missed the beginning of the stream when I discussed it is a research tool to calibrate expectations for context. It is used for research purposes. Some people use it during live trading to calibrate their expectations for the day. So if you have, for example, a day that opens with a bull gap of 30%, then they'll go through and look at the kind of variations, right, of that day, and just look at a few to just help themselves remain a bit less biased from what they might be otherwise. And just see, here was an example of where it ended always in long, pullback, trend continuation. But then look at there are lots of other features that you would usefully filter, right? So if you have a bull gap of greater than 30% and it doesn't close in the first 9 bars, traders will say, okay, well, what's the remaining probability that it will close? It's 25%. If it hasn't closed by bar 37, then you can assume that it has a low probability of closing. And if that's the case, then you have these charts, right? And that you can then go review and think about as you get towards the end of the session. And so you can use it progressively throughout the day. You can use it to calibrate different studies for basically any context condition you can think of. And if there's a feature that the dashboard doesn't include, there's often a way to create that feature using a combination of features. Or create a heuristic for that feature, like an early breakout of the previous day's range. What is the impact of that on the opening session range? And so you can get a really precisely calibrated expectation for that, because so if you have a previous session breakout that occurs within the first 12 bars, that happens 41% of the time. The impact on the opening 12-bar range. So the highest probability is that you're going to have a median somewhere around 43%, with the upper end of that IQR around 57%. So you'd be looking at reaching 57% as kind of the threshold for the end of a opening range, and likely transition to midday pullback, because we know that the mid session does not create new highs and lows at the same rate that the early and late session do. Right, so there's a lot of ways to creatively use it to think about the probability distributions the market generates, and then go study the charts to get that visual expression of what it actually looks like, what the probabilities look like in practice. I hope that answers your question. It is actually available now. This is I probably did a very poor job of announcing that it is live. So you can use the link in the description of this video. It should be there to sign up. And yeah, you're always welcome to send over questions. I'll probably do some subscriber Q&As in the first couple weeks, just to make sure that everyone's getting what they need. I'll obviously respond to emails, but um, making sure that we all have the tools that we need and the information to use this most productively. And I mean, this is the first full release, so there will be bugs, but there's always bugs in software. So anytime that you find something that seems anomalous, always just report it, email, and I'll take care of it promptly. So. Uh, Thoughts on incorporating intraday bar by bar gap statistics? Large surprise. You mean like micro gaps, like between bars? Um, Relative gap. Do you mean breakout, like breakout gaps that create micro gaps? Is that what you're referring to? Because if so, th- that n- so I will have that. That's one of the components that will be in the pro version because it requires different infrastructure. Let me explain why. Um, Let me just show here the um, so as you can see here, the all of these features are what I call single event features, right? They happen and then they're done, um, with the exception of two. And so I've included components of the pro version in the standard version because they are really important for being able to properly use the chart component. But these high of day and low of day probabilities are have significantly expanded functionality in the pro version because there's a new component which is called the buy bar input. Because right now we are not filtering for the number of events, so these are all single event features. The pro version deals with multi occurrence features, and it has a whole separate UI. Like there's two tabs here. So you have your single event tab and then your multi event tab. And the multi event tab are the things that you're referring to, where you'll have things like the number of how many bar closes, how many strong bar closes occurred within the first 5 bars. Um, yeah, and you can define the bar close using IBS, right? So you can say how many bars with an IBS of greater than 70 occurred, or you can filter for days rather that had 3 strong bars with an IBS over X in the first 12 bars. But that is a very different um, sorting algorithm than the one that we're using for the single event features. And that's not done, right? So I'm still working on that, and there's a lot that's there too. So that's where you'll see the pivot studies, leg study. So there's pivot, legs, micro gaps, consecutive closes. Right, there's a lot there, and so getting into and that's more intraday leg context and price structure rather than like day structure. And so what you see here is more day structure and calibrating expectations for day types and understanding the nuances that will lead to different day types. And actually, I will be adding a day type feature to the context to the standard version because obviously that can only happen once. Um, but you'll be able to dig more into the price structure analysis in the pro version. So that is coming though. But that's a good question. Uh, I did walk through the paint bar. I'm gonna have to wrap up in just a minute, but I will go back here real quick and just turn it on so you can see what it looks like. Um, this is let me just make sure I have that question on the screen. Okay, yeah. So this is the AMA paint bar on this chart. So you can configure it using all of the same settings that we have in TradingView or in TradeStation. So this is everything here. Yeah, your signal output controls. It's all of the things that you've used if you've used the AMA breakout paint bar. It tells you how many signals occurred that day. Then you can just go through and look at every day since 2016. Yes. So the 97 is for standard. The essentials is 27. We went over essentials at the beginning, and I think that for many that's a good starting place. If you've done price action research before, then it might make sense to start with standard. But just I would consider both. And if you have questions about both, you're more than welcome to ask and email. I'll respond quickly. But okay, yeah. Yes, this is going to be part of the microgaps module in the pro version, right? How long they take to close, how often they close, if they're created at what time of day, how often they close. There's a lot there. So yeah, that's in the works. All right. Well, let me return here. Well, I appreciate all the questions and the time that you all took here. Drop any questions on the video. Email me. I'm always around, and I'll look forward to catching up with you all soon. I'll probably try to do at least one stream a week going through a case study of using CAD. And so it'll be probably one case study on Essentials, because you can do very meaningful studies with Essentials. It's not like a throwaway tool. It's a very useful place to start and start really organizing your thinking. And so I'll start with studies on Essentials, and then we'll expand on that and look at how you can deepen that understanding with standard and expand your the scope of the study. So I appreciate all your time, and we'll catch up with you all soon. Have a great afternoon.